Everyone talks about credit scores, but nobody actually teaches you how to build your credit score. Let's talk about it. Today's episode is a big one. We're talking about how to build your credit score in Canada. Credit is king in this country, and your credit score affects so many things, from renting an apartment to getting a loan and even signing up for a phone plan. So let's break it down. Let's talk about what a credit score is, why it matters, the 5 factors that influence it, and practical steps to help you build yours. If you didn't know, this video is part of a series called The Newcomer's Guide to Canada, and it is brought to you in partnership with LemFi. Money transfers should not be complicated, but we've all been there. Hidden fees eating up your hard-earned cash, waiting days for money to arrive. I don't know about you, but I do not have time for that. LemFi is changing the game. Transfers are sent within minutes from Canada, the US, and the UK to 10 African countries. No fees, great rates, and your money lands in minutes, not days. And here's a bonus. If you use my code Reni, you're gonna get $10 on your first transfer of $100 or more. Thank you, LemFi, for sponsoring this video. And now let's get back into the video. So we're gonna start with the basics. What is a credit score? Your credit score is a 3-digit number between 300 and 900 that represents how trustworthy you are when it comes to borrowing money. So here's what those numbers mean. 800 to 900 means you have excellent credit. 720 to 799 means you have very good credit. 650 to 719 means you have good credit. 600 to 649 means you have fair credit. And anything below 600 means you have poor credit. So the higher your score, the better. Also, if you're in Canada already, just know that you already have a credit score if you're over the age of 18. So you can use the link in my bio to check what your credit score is for free. Now you know what a credit score is, but why should you care? I would say you should care because banks and lenders use your credit score to determine whether they're going to give you loans or credit cards or even mortgages. So the better your score is, the easier it is to get approved for these loans and the better interest rates that you'll get. And who doesn't love to save money, right? Let me give you an example. Imagine you're going to apply for a mortgage. On a $300,000 mortgage, someone with excellent credit may pay 4.5% interest, while someone with poor or fair credit may pay 6.5%. It may seem like, oh, that's only 2% difference, but that difference is hundreds of dollars every single month. And also, aside from the money, when you want to rent a house, your landlord is going to check your credit score. When you want to apply for a job, they also are going to check your credit score. So it's important. Know this and know peace. Okay, so what actually goes into your credit score? There are 5 key different factors. The first factor is payment history. This makes up 35% of your score. So do you pay your bills on time is the question. This is the most important factor, I would say. And I'm going to give you an example to illustrate this. Let's say you have a credit card that has a payment due date on the 15th of every month. And let's say by your statement dates, you owe $500. That means before the 15th of the month, you need to transfer $500 to that card so it reflects as $0 owing by that due date. The next factor that makes up your credit score is credit utilization. This is 30% of your credit score. So this is asking how much of your available credit are you using? If you keep this below 30%, that is ideal. So again, let me use an example. If you have a credit card that has about a $1,000 credit limit, on your statement every single month, it should say that you are using $300 a month or less, which may seem like a little, but yeah, they want you to use only 30% of your available credit limit. The next factor is the length of credit history. This makes up 15% of your credit score. So how long have you had your credit accounts open? The longer you have opened them, the better. And of course, this is logical because if you've been borrowing and paying back for 5 years consistently, I'm more likely to trust you than someone who has only been borrowing and paying back for 5 months. It's just common sense. The fourth factor that impacts your credit score is credit mix. This is 10% of your credit score, and this just means that you should have different types of credit, like a credit card, a car loan, a bunch of different types of credit will help you. Lenders want to see that you have a good mixture of different types of people who are loaning to you and that you are responsible with all of these. And lastly, we have our 5th factor, which is new credit inquiries. This one is also 10%. And this basically means that applying for too much credit in a short period of time can hurt your score. When you're constantly applying for credit, you look a little bit vague and it looks like you can't manage what you have. So it's important that you don't apply for credit too often. often. Okay, so now that you know what affects your credit score, let's get into practical steps to help you build your credit score and also improve it if your credit score isn't too great right now. The first tip that I'll give you to build your credit score is first get a credit card. If you are new to Canada, consider starting with a secured credit card. If you're not new and you're watching this, you can start with any credit card. This is a great way to help you build your credit from scratch. Put down a deposit, usually between $500 to $1,000, and use it for small, regular purchases. And also pay it off completely every single month. The second tip I'll give you is to pay your bills on time. I cannot emphasize how important this is. And if you are someone who's forgetful like me, you can just pay your bills on time by setting up automatic payments. So it'll come directly out of your checking account and go directly to the bill every single month. This is important because even one missed payment can drop your score. And always remember, pay more than the minimum payment and ideally the full amount every single month. The third tip that I'll give you is keep your credit utilization low. So aim to use less than 30% of your available credit limit. So if your limit is $1,000, again, I mentioned earlier, try to keep your balance under $300. Another tip that I see a lot of people making a mistake is that they're closing their old accounts. So my fourth tip, do not close your old accounts. That first credit card that you had that you don't use anymore and you're like, why do I need this anymore? Don't close it, because the longer your credit history, the better. Keep those accounts open. Personally, I have had a credit card since I was 18 years old. I'm 28 years old right now, so that means I have 10 years of credit history that has been built. And if I close that first one that I got, even though I barely use it anymore, it will hurt my credit score significantly. The next tip I'll give you is to limit hard inquiries. As I mentioned earlier, inquiries are when you're applying for different credit. You're applying for a car loan, you're applying for a credit card, you're applying for a mortgage. Try not to apply for too many different credit products at once, because each application creates this thing called a hard inquiry, and that will impact your score. And then the last thing that I'll tell you, another tip, is to check your credit reports on a regular basis. So you can use a tool like Borrowell, which will pull from Equifax. And my tip would be to review that credit report on a regular basis every 6 months or so, and you're reviewing it for errors. Sometimes there can be unknown things that happen and pop up on your credit score. So you just want to be sure that you're checking it on a regular basis, and then you can get those removed from your record if you see anything that you did not authorize on there. Again, you can use Borrowell, or even your bank's free credit monitoring app will allow you to see what is happening with your credit report. The last thing I'll emphasize is that you just need to be patient and be consistent, because it can take a while to build your credit, but give it 6 months to 12 months and you will see improvements if you follow all those steps that I just mentioned. So that's it for this episode of A Newcomer's Guide to Canada. I hope that you enjoyed this video. In our next video, we're going to be talking about everything you need to know about renting your first apartment or house in Canada. So make sure you stick around for that one. It'll be out next week. Thank you so much for watching. I hope that you enjoyed this video. Leave any comments that you may have below, any questions that you have. I'm here to answer them. Thank you so much for listening, and I'll see you in the next one. Bye.